Welcome to Al Stocks. In this video, I'm going to break down the intrinsic value calculation of PayPal. As you know, since you're here, the stock has been down on a downward trajectory for the past month and a half. And I'm going to show you what the intrinsic value of the stock is, bull and bear case scenarios. And by the time you leave this video, you'll have a complete understanding on whether you should enter or not enter the PayPal stock. This is PayPal, ticker symbol PYPL. It is down 10.46% on the day, with shares trading at approximately $200. The last time we saw this was August of 2020. In the past month, it's been down approximately 20% from a high of around $310 in late summer trading. The question we have to ask ourselves is this company still overvalued, or is it undervalued and ready to buy? To answer this question, we got to look at the company's financials. I put up this figure here to show you in pink the numbers I'm going to be using to analyze the intrinsic value of the company. I'm going to take the net income, calculate the growth from 2016 to 2020, and I'm also going to be taking the free cash flow from 2016 to 2020 as well. Just a note, as you see, the numbers in TTM basically symbolizes, as of right now, how much money does this company have, right? And we're not going to be using that, but just assume that what I'm going to show you is going to be undervalued. All right, this is my DCF calculator, as you can see here. If you want access to this calculator, you'll be able to find the URL link in the description box and in the pinned comment section below. Now, remember those numbers I showed you earlier on? I'm going to be using them to find the fundamental value, the intrinsic value of how much should the company be worth as of today's present value. Now check this out. If you recall, back in 2016, they had a net income of 1.4 billion. However, they report in millions, and I'm going to do that as well. So it's going to be 1401. And then in 2020, it's going to be 4202. So we see an estimated short-term growth rate of 32%. Then we're going to go ahead and take their free cash flows from 2016 and all the way up to 2020. It doesn't matter where you put them on here. This just takes the average and integrates it within the calculator. I'm just going to type up the numbers here: 2489, 1864, 4660, 3857, 4988. Okay. So then now we have the average free cash flow using a short-term 10-year mark. We're going to go 10 years into the future and discount back at a 10% discount rate using a 2% perpetuity model. So I didn't show you this number, but if you go ahead and search for how many outstanding shares in millions does PayPal have, you'll find they have 1189, and that's of 2021. So as of now, this stock should be worth $321.67. So obviously it's undervalued based on this metric and criteria. But here's the catch, guys. Understand that we have an inflationary time. The Fed's tapering their $10 billion monetary asset purchases from $120 billion every month, which means that the market's been propped up by cash printing. We might have a rate or two rate hikes in 2022. So this discount rate, I think, is too generous. I mean, just let's quickly go here and let me show you something really quickly. Today, the CPI data was published. And as you can see, the CPI data came out higher than expected. I mean, guys, just look. The overall AIMS is up 6.2%. Usually 2% is inflation. Now this is 6.2%. And if you look at energy, 30%, and commodities are 49% year over year. Then you got new vehicles still high, and used cars and trucks. So long story short, the economy is not so transitory as what the feds have been saying. Now again, this is maybe due to supply chain and bottlenecks, but I think an appropriate discount rate would be 15%. That's what I'm doing, and I'm a very conservative investor. You can see that with applying a 15% discount rate, you'll have an intrinsic value price of $158.66. Basically, assuming there's a stock market crash, if there's a 2022 correction in stocks because of, let's say, they do a rate hike before Wall Street expected a rate hike, they taper even more. They change their tapering thesis and say, hey, we need to taper faster. This is definitely a bear case scenario. I believe personally, because they're free cash flow positive, they're generating cash. This is the type of business you want to be in because they can easily increase the amount of money they take because some people are so dependent on PayPal. I would say possibly a 12.5% discount rate would suffice. But even if you do that, you see that you have an intrinsic value of $218.59, really not that far off from what we expect the stock to be. But if you want to buy right now, and if you want to hold through the future pain, then I believe with the whole Amazon and Venmo, which I'm going to go over, it might serve you well in 2023. But I think 2022, it may not be good for these tech stocks because they have been overinflated with all of the stimulus money. Even leadership on the board of PayPal stated that, because people don't have stimulus, they're not spending as much. It's up to you what your investment thesis is, but if you take into account a 10% discount rate, you're looking at a $321 stock. Personally, for me, since this is a tech sector play, I'm doing a 15% discount rate, and even if it gets to this level, I want it to go lower than this level because I want to have a higher margin of safety, right? If you are more of an aggressive investor, then you could possibly do a 12.5 discount rate. And if it goes lower than 200, if it goes to 170, 150, then you can start averaging down. But for me, as of right now, I'm slowly increasing into the position of the PayPal portfolio. However, not as heavily as other companies. This company, I want to see it more discounted. Again, I'm a very conservative investor. Rule number one for Warren Buffett investing is do not lose money. Rule number two is to follow rule number one. You want to set yourself up in a great position. And, if you want to hold through the pain, go for it. You can go ahead and do this opportunity, but I think there is going to be better opportunities in the near future. Warren Buffett is stockpiling cash right now, and he's waiting, and so am I. Now that you saw my DCF calculation, I wanted to show you a slide they had from their earnings report this past Monday in the late after hours trading. You can see in the key operating and financial metrics, I want you to pay close attention to the net new active account. It went down 12%. The two parentheses means it's a negative. You got a total payment volume, which is a metric analysts use to measure specifically PayPal. It's up 24% year over year from Q3 2020 to Q3 2021. Now, what's interesting is look at the net revenues. The net revenues is up 13% year over year, and the free cash flows at the bottom right, 20% year over year. Those two is what I use to calculate my intrinsic value. And as you can see, this is the type of business that does really well during inflation. You want a business that generates cash during times of inflation. I also wanted to show you this Ortex data. A lot of traders follow this from the technical analysis perspective. Just see it as a grain of salt, but just add it to your analysis. You can see here in the pink highlighted box, literally today, they gave an alpha trading signal, EPS type 3, which is a buy, and a recommended hold for 83 days. Their artificial intelligence signal algorithm in Ortex, it gives a median return of 28.94%. So just understand that people are looking at this and they're buying. Now that you went over my DCF calculator, I'm going to go ahead and talk to you about some bull and bear case scenarios as well as competitors that as an investor you need to take into consideration. So first things first, for the bull case scenario, you have PayPal having a buy now, pay later platform. You have the cryptocurrency trading, high yield savings account, and a recently announced 2022 partnership with Venmo and Amazon. For the bear case scenario, you have PayPal talking about consumer spending concerns and offered a disappointing sales guidance for next year. They also talk about the global supply chain shortage and the absence of stimulus checks that a lot of people have. All that stimulus payment, where do you think it went? It went into the economy, and it prompted companies like PayPal, Amazon, and others. The economy is reopening. Thus, more consumers might do in-store holiday shopping, which unfortunately PayPal can't and has not had access to that market share. Couple competitors to think about is Square, Apple Pay, Samsung Pay, and I want to focus a little bit about Apple here. Apple is a massive beast of a company. In fact, other people are not acknowledging this, but Apple is becoming such a beast that in states like Arizona, Connecticut, Georgia, Iowa, Kentucky, Maryland, Oklahoma, and Utah, they are going to start rolling out a feature where you can have your driver's license integrated within your phone, which means that you don't even need a wallet. Having this type of access, literally, iPhones are going to start becoming the digital wallet, and also your Apple Watches. What's interesting about Apple is it's always trying to take market share from companies. It's so big of a company that it's just It's its own financial institution. Apple's so hungry to take market share from PayPal that they also want to get into the buy now, pay later platform, which then tackles companies like Affirm. The Amazon collaboration may prove beneficial at the end of 2022 and beyond. If you don't mind holding through the volatility, especially with the CPI data coming over 6%, then I would say go ahead, buy the dip, but understand that there's going to be some short-term volatility. For me, I'm a very conservative investor. I want to try to get the best deal based off of the fundamentals. Since I have these tools, might as well use them. And I would like to share with you these tools. So if you like my DCF calculator, you'll be able to find it in the description box below. And if you stayed this long, consider subscribing, liking, and hitting all the notification bells to get this video out there to help people conquer their financial independence.